All right, traders, it is time to prepare to trade the best setups at the best prices. In terms of the video and the trading plan that I posted yesterday, I made it very, very clear that we were going to be targeting the range of 402 to 403 on puts. I also made it clear that 399 was a key level for puts as well, but to be careful because this could spike to 402 to 403 before crashing. So I gave you guys the best entry possible, and unfortunately for me, when it hit that best level, I hesitated. It dropped very quickly, and then I was expecting it to drop some more. I waited. I wanted to get in on a spike up. It never spiked back up, and then I decided to go against my plan and buy calls on the dip, and then I had a very nice red day doing so by not trading the plan. So within this video, I'm going to explain to you the mistakes that I ended up making today, and I'm also going to prepare you to trade the best setups at the best prices heading into tomorrow, right? This is why it's always very important to be self-sufficient and to be aware of the plan and aware of the strategies, because if you're blindly following someone and they are breaking the rules and not trading their plan, then you are going to be blindly following with them into a loss, right? That's why education and self-sufficiency is key. So with that being said, in terms of Trader Society, despite my decent red day, it was pretty good. The results were fairly good. We had 46 green, 15 red, not too bad. In terms of FOMC could be very tough days. But I mean, the trading plan was spot on and phenomenal. It's just very unfortunate that I didn't trade it. So in terms of our levels for calls, we only had 2 levels of interest for calls. Obviously, the lower ones are the better levels. So 390, this was the best level for calls. That hasn't hit yet. And then on 394, we were looking for a quick scalp on calls. I tried it. It went like 50 cents against me, and then I got stopped out. And then gap to fill at 399. This is where you can possibly play puts, but I told you guys in the video yesterday, it's very likely that we see a spike towards 402 to 403, and that's your best range for puts for the bull traps. That was 100% spot on. So with that being said, I'll be going over the mistakes that I made, but first let's get into the trading plan. So in terms of the new trading plan and what I want to bring awareness to, the bull trap has been created. It has been set. The bulls just got trapped. With that being said, how does SPY normally react towards this level when it's forming a very bearish pin candlestick? As you can see right here, it normally continues to drop. So I'm going to show you some examples, right? So in terms of the examples, you can see right here, it retests, almost pushes higher, forms this red bearish candlestick towards the same price. Next day it drops and it sells off. And you can see the same thing right here. Look at this pattern, look at this trend. I brought awareness to this yesterday. This is why I was saying towards that 402 level. You can see you have this green candlestick right here. You have this green candlestick right here. Next day it gaps up, pushes a little higher. Next day it gaps up, pushes a little higher basically. And then it tops out towards 401.50 here. And I told you guys the range was 402 to 403. It topped exactly in the middle of the range of the zone I gave you at 402.50. So with that being said, the candlestick pattern is nearly identical. And based off of this daily pattern, you could see the next day it drops. So based off of the daily candlesticks and what it's telling me is, it is telling me that SPY is going to continue to drop. And then in terms of the next day, you can see it spiked a little bit higher above the previous closing price, and then it sold off again. So I would look for something similar. And this is what I would tell you in terms of the new best price. We were looking at $394 for a potential scalp on calls because that was a gap. We knew it wasn't the best gap. That's why I said it wasn't the best level. But we had a gap to fill here at 394, and we also have a gap to fill at 390, which would be the best level. So based off this trend that I'm seeing, SPY is going to go to 390 and fill the gap, and then we take it from there. So how do we capitalize off of the downside move that's coming up? Well, based off that pattern that I just showed you on the daily, I would focus on puts a little bit above the previous closing price. So it closed at 392.11. It's already gapping up. This is what I can tell you. 394 was a previous support right here. This 393.74 previous support, big upside potential. The daily pattern says the bulls got trapped and we should continue to drop heading into tomorrow. It's also saying we could potentially spike above the previous closing price at 392.11, and it's already moving up a little bit during extended hours trading. So with that being said, I would say, based off the pattern, and I explained to you how it went a little bit above the previous closing price, 393.74 is your new best price for puts, in my opinion. That's your new best level. It cracked the key support. This was a key support level and a key gap fill level with big upside. Well, if that cracks, it's going to be big downside. When it spikes back up and tests and reacts as a resistance level, it should sell off and start to fill the gap below at 390, which is where you lock in gains. You do not get greedy. It's going to try to spike and reverse initially at 390. If it cracks 390, then we go to this 388 zone, right? So tomorrow I would focus on puts, and I would focus on 393.74 is your best entry. If it spikes above the previous closing price, look for above 393.74 best entry, in my opinion, right? And then if you see it drop from being above the previous closing price to back under and it forms a roof at 392.11, that's another scalp for puts, right? So those are my opinions. Those are my thoughts. The best thing I think you can do and what I think you should focus on is, and what you should understand is, SPY cracked this key support level and it has never retested. Based off the pattern that I showed you on the daily that has been repeating for 3 days now, it spikes above the previous closing price, which is at 392.11, and it's already spiking above it, so the pattern's already repeating itself, right? And then it sells off. So your previous support above the previous closing price is at 393.74. So in my opinion, that is where your best price for puts is going to be based off the pattern that I showed you on the daily. It has a small spike above the previous closing price, then it sells off. And then from there, once we go under 392, after it has that spike and if it drops back from being green to red under 392, then we sell off to 390, and then you just call it. You do not keep hitting puts below that. 390 is the sell zone. That's where you take profits. If it cracks 390, then we go to 388, but I wouldn't even play that. They're going to try to have a small bounce initially, likely at 390 for calls, but the overall trend tomorrow, in my opinion, is either going to be bearish close or a close in the middle. In the middle would be around that low 390. So that's the game plan. Super simple. I think it's a phenomenal trading plan if you can buy puts above the previous closing price. If you can get filled at 393.74, I genuinely believe that's going to be the best price. And what are we doing? We're taking advantage of the bearish pattern. Support has cracked. It cracked through the gaps. When it cracks through the gaps and reacts as a resistance like it did right here, you play puts, right? Right here, it cracked through the previous closing price. If it instantly spikes back up, reacts as a resistance, you play the puts. When key support cracks, when the key gap cracks, and it has a nice sell-off, when it rips back up, that's when you play the puts. So I would do the same thing that you could have done at 399 previous closing price at this 393.74. Very simple game plan. It's going to try to spike first, and that's where you're going to want to get puts for the best price. And then it goes from green to red. If that happens and it forms a roof at 392, then we drop to 390 and lock in profits. Super simple day. Scalp it. It should be a phenomenal green day, and that should be fairly good enough to get you within Trader Society. That's the game plan for tomorrow. There is no other plan. There is no other thesis. I'm not interested in being long biased, right? Obviously, if it looks extremely bullish, I'm just going to sit on the sidelines. So what I need to focus on is trading my plan and sticking to my overall plan. If there's a key level that I'm interested in buying puts due to specific patterns, due to specific trends and analysis, then I need to focus on that puts at level with confirmation. If it reacts bullish, then I need to be smart enough to just not trade puts, but avoid calls. That's one thing that I'm going to work on. Trading my plan, using confirmation, and if it reacts the other way, right? So if I'm bearish or bullish at a specific level and it does not react that way, do not trade it at all. That's one thing I would recommend, right? Because I screwed up by I was eyeing puts at 402 and it dropped so quickly, and I kept telling people this is going to sell off next 30 minutes from 3:30 p.m. It's super bearish. And then I missed out on the play because it just kept dropping. So I started to buy the dip because it kept bouncing off the previous closing price. And then it just cracked through and I took a hit on that trade, right? So I never had interest in buying calls at 399. So if I don't have interest in buying calls at a specific level, even if it reacts bullish, I would recommend just don't buy calls. Don't buy calls. Have a bias, but if it reacts against your bias, then just don't trade it, right? That's what I would recommend. So for tomorrow, I'm going to be short biased. If it reacts bearish at my key levels, then I'm going to be looking to play puts and I'm going to stick to my plan. If it reacts bullish at my key levels and it's not doing what it is that I want to do, I'm not going to go buying calls. And if it reacts bullish and I'm in it, my max pain will beat like 394.50. That's max pain. So that's one thing that I would recommend for traders. Stick to your trading plan, stick to your bias, but react and trade the price action. But if you know it's a terrible level to be buying, we knew that 399, we knew 402, terrible levels to be buying calls. If it reacts and looks bullish, I would tell you to just don't do anything. Don't buy calls. You'd probably be even better off with just getting puts in a sense because of the overall trend, right? But I would tell you don't do anything. If it looks bullish at a level you're bearish at, don't inverse it. Just do nothing. Just do nothing. Wait for it to look bearish. Wait for confirmation. If you don't get confirmation, don't do it. Just don't trade against the plan. Have some sort of thesis, some sort of bias in a sense, but don't blindly trade the bias. Look at the price action, look at the confirmations. And if it's looking bullish at a level where it's not ideal to be buying, then just don't buy it. Just miss out on the trade. Just say, okay, this is where I want to buy puts, but I don't like how it's reacting. It looks bullish, but I don't want to buy here. I don't want to buy calls here. So I'm just going to sit on the sidelines and I'm just going to wait for things to play out a bit. If it looks bearish, I'll stick to my plan. If it doesn't, then I'll just sit on the sidelines. That's one thing that I would recommend you, because if I were to do that, that would have saved me. So moving forward, what I need to focus on is I've been on a very nice green streak. But what I have noticed with my trading is sometimes I just completely throw the plan out of the window and I do not trade it. That's why you must be self-aware. You must stick to the rules and you must be disciplined and you must stick to the trading plan. And I would say have an overall bias, but don't let that bias tell you what the price action is going to do. See how it reacts. See how the confirmations are looking, but stick with the overall plan. If you know it's a terrible level to be buying a call option, don't buy the calls no matter what. Even if it looks bullish and there's bullish confirmation, just sit on the sidelines. Wait for it to play out. It might flip bearish later, and then you get your bearish confirmation, then you play it, right? Because you want to play puts there, right? So I would say have some overall thesis where no matter what, you just don't buy calls or puts here, right? Just have that in mind when you're trading. Write out your levels, trade your levels, because we knew $399 and $402, no matter what, we don't want to do call options. And I brought awareness in yesterday's video. $399, it's a good level for puts, but I can see it's going to 402 to 403. So be careful, and that's your best level for puts, 402 to 403. And surely enough, that was the exact peak, and that's where SPY got crushed. So for those of you who took advantage and trade the plan, big shout out to you, because that was the play, man. Today I went against my plan and I was trading very emotional. It was not a good day for me in terms of how I actually traded. I did not trade my plan and I'm very disappointed in that. So moving forward, I'm just going to try to focus on the plan and I'm going to focus on sticking to some sort of bias with my levels, right? So if I have a level where I'm interested in puts, it's overbought, it's overextended, I'm going to respect it. If I get in, I'm going to get stopped out quickly, but I'm going to respect the level, right? And with that, having that respect, I'm not going to go against it, even if it looks the opposite of what the plan is. I'll just sit on the sidelines, or if I'm in the trade, I'll just get stopped out. It's as simple as that. But it's just smart to have some sort of bias and some sort of plan, right, and to stick with it. So moving forward, I'm just going to focus on trading the plan. If I just continue to trade my plan, I'll be absolutely fine, because the key levels were very, very spot on, and I gave you guys the best level for puts. I was planning to do it, man. I'm so frustrated because when this was at 402.50, it dropped very quickly, and I was planning to get in. I told people at 3 p.m., it's going to crash the next 30 minutes. I was telling them that when this was in the 402s, and we knew the best level for puts was 402, 403. So I was like, do I get in 10, 15 minutes early, or do I just wait? And I hesitated, and then it had this big drop right here, and this is what screwed with me, because it was 7 minutes before I was expecting it to drop, right? So what I tell you is, if it's at your best entry and the 30-minute candlestick is close to closing, just get in on the trade. See, this was close to closing and it was at the best price, so I should have just got in. But if it was at this price very early before the 30-minute candle closes, then it can flip-flop and it can do all sorts of things. It's just not as much ideal. So I should have just got in, because the 30-minute candle was already about to close. It closed in 10 minutes from the price, and it was already at a good price. So I should have just took some starters and just got in on the trade. But as I was watching this crash, I was very pissed off, because I told people, I think it's going to crash at 3 p.m. And it crashed 10 minutes earlier from hitting the best level. It crashed 10 minutes earlier. So then my logic was, well, it already crashed. I'm pissed off that I missed the move. I'll just buy the dip. And that was not in the plan. I literally told people I'm super bearish from 3 to 3:30 p.m. I think the next 30 minutes are going to sell off. When I said that, 10 minutes later, it drops very, very quick, 10 minutes earlier than I expected. So then I get pissed off that I missed the move. And one of the traders within Trader Society, he was scalping calls literally at the peak. He was buying calls at 401.40. He sold into the rip very, very quickly, made his win. He gets in and out within seconds. It's a different strategy, focused on momentum, not focused on the best prices. And it's all about timing and getting in and out, right? And that really pissed me the fuck off, because I had calls literally right here at such a good entry at $399. And then I got stopped out when this went to $397.50. And then it shoots up all the way to 402, and this guy's banking buying at the exact peak. Really pissed me off. So when it dropped back down to here, I was like, fuck it. I'm just going to get emotional and buy some calls. And then I got wrecked again. So yeah, just stick to the plan and have some sort of bias. If it looks bullish at a bearish level, but you know this is not a good level to be buying calls at towards the top of the channel where a bull trap can eventually get created, just stay away from it. Stay away from it. Wait for your plan to play out. Wait for some sort of bias. Wait for some sort of confirmation, right? So moving forward, stick with the plan. And if it looks the opposite of your plan, just do nothing. Literally do nothing, right? If you take it, you get stopped out quick. If you don't take it, don't try to inverse it and make money by, doing the opposite. Just sit on the sidelines. That's what I would recommend moving forward. So those are the overall mistakes that I ended up making today. The main mistake was that I did not trade my plan. And I got emotional. I did some revenge trading. I was very frustrated. None of the trades were going my way. And, it can be very tricky. You have to be extremely sharp and you have to be extremely on point if you're going to trade during this volatility of FOMC. Some people do very, very well on it. And then other people, they just get absolutely crushed on it. It's not the most ideal thing to be doing. But if you know what you're doing and you stick to the plan, you can do very, very well because we had a concrete, solid plan. And there's a reason why members within Trader Society, despite me having a nice red day on stream, there's a reason why they still did fairly well as a whole. Because they're self-sufficient. They're trading the plan. They know to not blindly follow me. You should not blindly follow anybody. You should be self-sufficient and smart enough and educated enough to know he's going against the plan. Let's inverse him. It's time to inverse this guy. He's doing what he's not supposed to be doing. You should be questioning that. If you're not questioning why I was buying calls that high, then you're not trading the plan. You don't have the education. You're just blindly following, and you deserve to lose just as much as I deserve to lose because I went against the plan. You have to be self-sufficient. You can't sit here. I never said this was a program, and I'll never sell it as this in terms of my program, Trader Society, where you're just going to make money blindly following me because, say someone's a perfect trader and they're successful and they're always perfect. I don't tell people that. I don't tell people that I'm a perfect trader. I don't tell people to blindly follow my stuff. I tell them to learn the actual strategies, to be self-sufficient, to stick to the trading plan. You should know when I'm not trading my plan. You should know when to bet against me. You should know when to inverse me. And you should be able to capitalize off of the live stream. If I'm getting wrecked on live stream, you should be able to bank on the live stream because there's a reason why I'm getting destroyed. If I'm getting destroyed, it's typically because I'm going against the plan. I'm not sticking to the plan. I'm not trading the key levels. We knew this right here, this key 402 level was the exact peak. And history repeated itself. So for those of you who trade the plan and traded the bull trap, big shout out to you. You got to stick to the plan, guys. So that's what I would recommend. Those are some tips. Those are some tricks that I would give you. And I personally believe that tomorrow is going to be a phenomenal green day as long as I stick with the plan. So like I said, best level for puts, in my opinion, is going to be this 393.74 level. This 393.74 level, right? That's what I genuinely believe is going to be my best level for puts. If it starts going above that and I get stopped out at like 395.20, my stop will be around there, then I'll look to get back in at like 397.60. So if I get stopped out here, I'll look to get back in here, and then that will be it. Those are my only trading plans for the day. So it is what it is, guys. Stick to trading the plan. Stay disciplined. You have to be self-sufficient and be self-awareness to know that if you're watching someone stream or if you're trying to follow someone, to never do it blindly. That's the key, because they could be making a mistake. And if you don't have that plan, if you don't have that education, you're not going to be able to see, you're not going to be able to be conscious of them actually making mistakes in real time. It's one thing to have a plan, but it's a whole other thing to actually trade that plan and be disciplined enough. So that's one thing that I did notice with me. Sometimes I just do not trade the plan. Monday I traded the plan great. Tuesday I traded the plan great. But today it was just not a good day, and I paid the price for that. I lost 11K today going against the trend several times. I went against it like 4 or 5 times today, and it just was not my day. So it is what it is, and moving forward, I'm just going to bounce back and continue to trade the plan. As long as I trade the plan, as long as I'm disciplined, I'll be fine, because I know what I do and what I teach works. You just have to do it, and you have to be disciplined enough to do it and to stick with it and to persevere through the red days, right? So with that being said, that is our plan to trade the best setups to the best prices. If you do want to be a part of Traders Society, it's going to be the first link down below in the description. It's a one-time fee. You get lifetime access to the live trading streams, to the voice live on Discord, to the Discord chat room, to the SPY trading floor, to the swing trading floor, to the real-time trailers. That's another thing. Even though I didn't trade my plan, I was self-aware enough to know. And you could tell if you're watching the stream, I just wasn't confident. I was just revenge trading. In a sense, I even wanted to lose in a sense. That's how frustrated I was. But I didn't alert these trades in Will Alerts. This is where I post the best setups at the best prices. I did not alert any of my trades here because there was no best setups at best prices. There was a best setup at the best price. It was puts at 402, but I didn't buy puts at 402. And then when it dropped under 400, I bought calls. I didn't alert any of the trades in here because I didn't trade any of the best setups at the best prices today, and I did not trade my plan. So I'm self-aware enough to know if I'm typing something out on a computer as I'm typing it, my brain is literally going to go, is this the best setup at the best price, right? Very, very simple. But if I'm live on stream, it's happening in real time. Shit's going down. I can just make a trade off the fly, click one button. Then it could be a little bit different. But I'm self-aware enough to know if I'm typing something out and sending it to my team as best setup at best price, then that's what it is. And these have been hitting, right? So that's another thing to keep in mind in terms of the live streams, right? If I'm not typing something out and I'm making the trade more off the fly, or if I'm going against my plan, then it's not the best setup at the best price. But I will always make sure that the best setups at the best prices do get posted in this, right? Because if I'm typing it out, I can visually see as I'm typing it, that's the play. That's the best setup at the best price. That's aligned with the key plan. That's another thing. It's very important to write these things out. If I have my plan, these are the best setups at the best prices. And then if I'm alerting the best setups at the best prices here, I will visually know that it's aligned together, right? But if it's not in front of my face, or if I'm not thinking about it, then I'm gonna make sure that, okay, maybe on the stream I'll make the lotto trade, because that's basically what these were. These were lotto trades against the plan. These were terrible trade ideas. But I'm going to be self-aware enough to know to not alert those in real time, right? So that's things you have to be aware of. I always tell you guys, so in a sense, the trades on stream were lotto trades. They were not great trades. In terms of the best setups, the best prices, you will find them here on the Will Alerts. I could even set up my streams in a way where I only go live when I'm trading the best setups, the best prices. I started doing that earlier this year and I was doing very, very well. Basically, I would only turn on the live stream when a price alert triggered and that price alert was set at the best setup at the best price. Meaning I would only be streaming live when a good opportunity is presenting itself rather than streaming just to stream looking for a good opportunity, right? So one thing that I'm probably going to adjust as well, just to instill the discipline, is just to turn on the live stream. I could set live stream alerts. Like I could set an alert right here. So what would be a live stream alert? I think 394 is going to be a good level for puts. So I can create an alert, and then in the notes, I can put go live. This is the best price gap close reversal. And then when the alert triggers, I turn on the live stream and I alert people. They have push notifications on the channels, right? It's systematic. It basically ensures that I'm disciplined, and it handicaps me to just make sure that when I'm on a stream or when I'm trading, I'm just trading the best setups, best prices, right? And I can also draw lines out. So I would tell you, create some sort of system that instills discipline, create some sort of system that you can see it in front of your face. You don't have to think about it. It's just all there for you. And that's probably a system that I'm going to stick to, because I was extremely disappointed how I traded live on stream. So if I'm only streaming when the price alert triggers, then I have a much higher probability of being successful and for other people to be successful, because that means we're only live streaming, we're only watching the screen when the best setup at the best price triggers, man. I'm telling you, if you see this volatility, it's going to bring emotions. If you're seeing all this volatility play out at not the best levels, it's going to create emotions. You're going to want to jump into something, right? If you want to instill discipline, you got to do it from, I would say, a systematic approach. Create a systematic approach where it's like it handicaps you in a sense where you're not going to do anything stupid and you're just going to do what you're supposed to do, right? There's no reason to sit here and trade and watch charts all day if you could just set price alerts at the best levels, and then I could just go live at the price alerts, right? Because I don't want to sit here and waste people's time, and I don't want to sit here and give bad trades. There's a reason why I didn't alert any of these trades that I made on stream, because they weren't good trades. I knew they weren't the best setups, right? Anyone who had the plan or had the education knew, oh, it's going under the previous closing price. If it goes under the previous closing price and it reacts bearish, then we're not going to go and do calls. That's a bearish reaction. It's having a gap close reversal where it fills the gap, it starts to have a reversal, right? So these are just all things you got to be aware of, because SPY was having a classic gap close reversal. It had a little gap down, and then once it filled the gap, it started to have a reversal later on. We know if it cracks, it has a big drop and it pops back up to previous closing price, then it reacts as a resistance. So that's probably something that I'm going to be adjusting in terms of the program, because I do want to make sure this is the highest quality program possible. So basically, I'm just mainly going to be looking to go live when a price alert triggers. So I'm going to have my plan in my key levels. right? So I'm going to write out my key levels. I'm going to have my plan. When the key levels trigger, I go live on voice, or I could turn on the live stream as well so you could see my screen, and then we're good to go. But if the best prices, the best levels aren't triggering, then I don't think or see that there's any really benefit of me going live. It's just going to be nothing special, nothing good. I might force a trade. I might make a stupid lotto, or I'm just going to be quiet and just waste time. Like, it's just not worth the time, and it just doesn't make sense for me to be being live when the opportunity isn't there. Why would I sit here and wait for an opportunity when I could just systematically trade the best setup at the best price and then use my time to do other things? And you could do the same thing as well, right? Because if I would have just done that, I would have done a lot better today, right? So that's what I would say, and those are the mistakes that I made, and that's what I'm gonna work on moving forward. If you do wanna be a part of Trader Society, it is the first link down below in the description. You get a one-time fee, you get lifetime access to everything. It's all included in there. We're gonna be raising the price end of March, so if you do wanna join, now is the best time to be joining. For those of you who are inside of Trader Society already, make sure you check the announcements. We have a special announcement in a last call, so if you want to check that out in the announcement section, that's going to be disclosed there. I will see you guys tomorrow live at Market Open within the chat.